So we have a month left before the year ends, but overall, how has the KLCI performed? Better or worse than people been expecting?
Well, it's not doing well relatively, right? If you look at where we are, we're still below 1600
Yeah, it was
points.
1595.
And if memory serves me correctly, I don't think we've ended a year below that threshold for many years now, maybe 5-6 years
Okay.
or more, right? So we have a few weeks left in the year, so whether there is some energy left for a brief rally overall for the index is yet to be seen. But historically, we can take encouragement that in the final quarter of a year, over the past decade, more often than not, the FBM KLCI index does tend to re-energize and recover some of the lost ground in the final 3 months of the year.
Okay. So speaking of re-energize, you wrote about window dressing. What are we going to see?
Well, of course, we don't know what the big funds may or may not be doing.
Okay.
Right? But historically, what we can see is that there's a tendency by the end of the year to rebalance your portfolio and all that, to lock in gains.
Okay.
And when that happens, usually some of the key stocks that have been underperforming tend to correct themselves. For example, if you look at the index, some of the big constituents with a major weightage has been underperforming this year relative to the index. And so those are the stocks to keep an eye on, I suppose, if there's a rally coming.
Okay. So I think the one main criticism of the stock market is that it has always been lagging behind regional peers, but the fund managers you spoke to seem to think that foreign net buying will come back. So, but what is there to stay for?
Unfortunately, I guess what we were told is that Malaysia in itself may not be like the number one choice to invest in, right? It's not like the absolutely must-have portfolio in your investment.
But still attractive.
But still, if you look at how we've been doing so far, up to last Friday, we're down 5%, more than 5%. Now, if you look at Asia Pacific, a lot of the major indices have gained this year, and even those that have declined have not declined more than 1+%. So we are the clear underperformers in that basket, Asia Pacific. So in that sense, if there's a return of funds to emerging markets from the developed markets, Malaysia is a standout candidate because we have been underperforming badly.
All right. Now, I know you mentioned a lot about banking stocks, despite them being a drag to the FBM KLCI. But other than banking, what other sectors should we be paying attention to?
Well, I guess it's really hard to tell, because at the end of the day, a lot of it is sentiment, and it drives the market in that way. So when we look at the FBM KLCI, for example, what's dragging it down, right? Banks are a clear sector, and the weightage is quite heavy as well.
Okay.
But you also notice that plantations is also quite heavy on the index, and now with the recovering CPO prices, crude palm oil prices, if you look at today's Financial Daily, some analysts are already talking about how the fourth quarter, if this CPO uptrend continues, might lead to a strong fourth quarter in terms of financial performance, maybe even stronger than we've seen in recent years. So there's something to watch out for, whether it will catalyze some of the plantation stocks.
There were quite a number of GLCs also in your story, but how about non-GLCs?
That's interesting, right? Because obviously GLCs have a pervasive presence in Western Malaysia because of the size of the funds that they deploy. But then I guess on the flip side, the non-GLCs, even some of the companies that are so-called non-GLCs, we see some presence of institutional investors. And I think at the end of the day, if you're trying to look at what would probably move the market, right? It's also a function of what sort of impact a particular counter's movement would have on their portfolio and on the index.
All right. But I'm just very curious, are we still able to close the year maybe above 1.6?
Well, if you don't, it'll be quite a record low, isn't it? Multi-year record low. So fingers crossed for the market.
All right.
It will be good to say that we did not end on a record low this year.
For more on the stories, pick up a copy of The Age Weekly at all good newsstands.